Homeowners shelling out a bit more for their mortgage payments as interest rates rise, and it could come faster than expected, with the risk, of course, the U.S. Federal Reserve hikes rates more aggressively than previously thought. Our next guest paid off his mortgage in 3 years, and he chronicled that journey in his book, Burn Your Mortgage. I spoke to Sean Cooper about how to pay down your mortgage faster. He says start with accelerated payments.
Many lenders allow you to choose your payment frequency. They may set you up by default on a monthly payment frequency, but you can choose typically bi-weekly or weekly, and that can save you a small amount of money, but where you save yourself the big bucks is paying it on an accelerated basis. Now, the difference between accelerated and a regular mortgage payment is that you're paying a slightly higher mortgage payment, and that can help you save yourself thousands of dollars over the life of your mortgage, depending on the size of it, and pay off your mortgage years sooner, potentially.
I think that's what a lot of people don't think about in terms, they sit down with a bank and maybe not familiar with how a mortgage loan works over the long term, and they're saying, oh, if that's my payment, then that's fine. Or they're not realizing the power of getting that principal down.
Exactly.
In terms of thinking that way, too, you can make lump sum payments. It doesn't have to be just about doing bi-weekly or weekly. If you have an extra bit of cash around, your mortgage might actually allow you to throw it down on the mortgage.
Yes, and you're probably thinking, where can I come up with an extra $1,000 or $2,000 payment, especially when there's so many high expenses like childcare costs. So the tip that I offer is to use found money. So whether it's a bonus at work, a pay raise, or even a tax refund, since we're around that time of the year, take some or all of that and throw that against your mortgage. And the thing that makes it so powerful is that when you make that prepayment, 100% of it goes towards principal, which can help you save a ton of money over the life of your mortgage. Now, it's important to keep in mind that certain lenders are more flexible than others. Typically, the monoline lenders allow you to make lump sum payments on any of your regular mortgage payment date, but with some of the bigger banks, they might only let you make it on your anniversary date, so just something to keep in mind.
Now, you mentioned a number there, 1,000 or 2,000. Some people, you know, the regular person might find themselves in that situation, a grand or two of found money, but they think it's not going to make a difference when they're looking at a mortgage, just $300,000 or $400,000, but it can make a difference.
Yeah, if you continually make like lump sum payments of $2,000 a year against your mortgage, it can easily help you pay it off years sooner and save yourself tens of thousands of dollars in interest. So every little bit counts, as I like to say.
Here's another one, too, that when it's time for mortgage renewal, the bank or institution that you're at, and I've had this, they just send you a little form saying, so easy, just sign your name. My wife signs her name, they're going to give us this rate, and the rate on it is insane. When I saw it, I was like, oh my God, like I'm going to sign away at this rate? Shop around.
Exactly. You may be surprised to hear, but 1 in 4 people, surveys have found that they actually just sign the renewal papers and don't think anything of it. And it's important to recognize as a new client of a bank, and when you're renewing, they typically offer you 2 different mortgage rates. So my piece of advice is to have your mortgage broker on speed dial, give them a call when you're looking to renew your mortgage, and you might end up staying with your current lender, but if you find a better rate elsewhere, perhaps you can get your lender to match it. So definitely take that same effort to shop around when your mortgage comes up for renewal.
A lot of people I know aren't great hagglers. I'm not a great haggler. But, I mean, it was what we say when people invest in the stock market, too. Take the emotion out of it. Your bank isn't your friend. You should be able to haggle with them.
No, I totally agree.
Totally agree. Do not treat the bank like a friend. Haggle with them. The next one is, and I believe you did this, was part of your strategy, become a landlord.
Yes, and just a word of caution, it's important to definitely take a look in the mirror and ask yourself, do you want that added responsibility? Because if you watch some of those real estate shows, they make it seem so glamorous, but when you're a landlord, there's that cliche saying, you know, if there's a leaky pipe at 2 a.m., you have to be willing to take that phone call and deal with it. And you also have to be willing to deal with tenant complaints. So ask yourself if you're willing to take on that added responsibility, and if you are, it's a great way to subsidize the high cost of real estate in expensive real estate markets. And if you're even more ambitious like me, you could perhaps consider a creative living arrangement. So being a single person myself, I decided to live in the basement of my house and rent out the upstairs. And when I did the math, by renting out the basement, I only could have earned $800 a month, but by renting upstairs, I was able to double that to $1,600 a month. Now, I'm not saying that if you have a family, that's a good idea, but you know, you can certainly consider renting out the basement instead of using it for storage. It's better than taking on a second or third job, that's for sure.
Definitely don't want to live in my basement. It's only 6 feet high. I'm a bit taller than that. The final one is, if you have a goal, then set a goal. Set a date to burn that mortgage.
Exactly. I'm a big fan of goal setting, it just basically motivates you to get up every single day and work one step closer in order to burning your mortgage. So my idea is basically, if you have a 25-year amortization, set yourself a goal of perhaps paying it off in 20 or 15 years, and then work your way backwards, figure out exactly how much extra money that you'd need from each paycheck. And if you don't have that extra cash flow, perhaps look at earning some side hustles, some income on the side, or perhaps cutting back on your expenses. And set yourself a goal in terms of financial freedom. So whether it's traveling the world or retiring early, have that visualization in your mind so that you have something to strive towards, and that will make you work even harder in order to achieve that financial freedom.